If the nature of price is fractal, then why are lower time frames considered noise? Welcome everybody back to my channel. Today I'm going to be talking about a couple of trades that I took over Friday in light with the fractal nature of price, and then trying to keep things simple, right? Consistently repeatable, stress-free. Trend continuation model that can take advantage of every 15-minute momentum candle. And the question then becomes, why do we have to wait for price to go back to an order block, to go back to supply and demand zone on the swing state of 15-minute chart, and spend my entire session waiting for the price to get to that point, and then potentially may get an entry or may not get an entry? If you look at the charts right now, this is a 15-minute chart on your USD this last Friday. The price is clearly ranging, yes, but we can, with this model, still take advantage of small price movement and get maybe 2, 3, even 4 hour times in our favor. And there's a logical way to get involved in this. Why would I need, so if this is a nice demand zone that was created because it broke structure, then why do I have to wait for price to get all the way back and then potentially get involved here where I might or might not get an entry? Or if I'm looking at this zone here, why, and you can see a nice little push, why do I have to then wait all the way during my London session, my New York session, all the way to see if I can get involved? And when price reaches here, anyways, it's out of my trading window. So let's dive a little deeper into this. Very quickly, if I were to look at this 15-minute candle, this is my fourth trade of that day, which is right here. So what do we see? We see there is a momentum candle. So before this, everything is within a range. So let me just zoom this in. Before this, everything is within a range. There is no price movement. There's literally nothing happening, and we are staying put. So when price breaks out of this range and closes pretty strong below all of these lows, all these wicks, we understand that price is going into a downward trend, right? So if I were to zoom out, look at this. This is the price. It broke this high, yes, so it's trending higher, and then it broke this low. This low failed to create a higher high, and then got broken again. So price is clearly in a downward trend. So even if I were to look at just to the right of this crosshairs, it's creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then a massive lower low. That to me is a clear trend. But how do I get involved in this, right? So let's look at this. And my question to you guys were, if price is fractal, then why do I have to wait on a larger time frame, 1 hour or 15-minute swing structure, for price to get in there, and then look at my lower time frames to get involved? Why can I not use the 1 minute on the micro trend on what my 15-minute candle is telling me, which is the trend continuation model? If the price is strong bearish and it's telling me in this 115-minute close, I can see it clearly on the 1 minute chart. Then with the start of the new candle, when it starts pulling up to create the wick, it's going back into my supply zone, right? Similar to any other zone that price leaves and then goes back to that point of interest. It's exactly the same thing. Price is fractal. And look at what happened here. It took inducement, right? Inducement is the lower high that broke the lower low. So the first lower high is considered apparently through SMC inducement. We took out inducement. We had a strong reaction from that zone. So order flow did change. Why do I say order flow changed? You would argue that there's no break in structure. Yes. But it did break the low of this candle. So if I were to take this into a seconds chart, 15-second or a 5-second chart, the trend over there has clearly broken. And this strong 1 minute candle is telling me the seconds chart has now changed to a bearish trend. So once that happens, why can I not place a stop order entry behind, keep my stop loss behind this high, and then wait for price to do its thing? Reaction from a zone. We have 1 minute bearish candle. We had liquidity or inducement taken, strong bearish reaction, strong previous 15-minute candle close, entry model, liquidation candle, and the reaction candle. And boom, you have a 3.97 hour trade. Very simple, repeatable. We can look at another trade, for example, So let's look at this right here. Very, very simple, right? This is the candle that I'm focusing on. That's my first 15-minute candle during the London session. Prior to that, there is nothing happening. Literally, price is staying within a range. It broke the lows through this wick, but it closed with equal amount of wicks and shorter body. So I'm thinking to myself, yes, looking at the charts, it did break some structure on the 1 minute. You are creating lower lows, lower highs, lower lows, lower highs, all the way down. Then if it's pulling back in on the next candle, so observe my crosshair. If I move this right there at 12:15, it starts a new candle, right? So it's pulled up already into a nice supply zone, and it's giving me a reaction. There's a new demand zone that is created right here. So give me 1 second, right there. And if price has gone through that demand zone and that demand zone is basically not relevant anymore, then why can I not place an entry at the breakout of this and place my stop order at the top of this structural high? And there you have a simple 1.73. This would have been a break even for me, but I'm trying to show you that we can capture trades pretty much at every 15-minute candle. Let's look another one, trade 2, which was this right here. It had a strong wick reaction. We are trying to get involved in the follow-up of the 15-minute candle. The first 15-minute candle had that long wick, and then it closed bullish. So I'm looking at my trend. The last lower high was broken. Even with wicks, it was broken. It came into sell those buy wicks, which essentially is demand on lower time frames. And once it gets in here, it does not give me a strong reaction, right? So it goes up and then creates a wick over here. And then I'm thinking that if this breaks, right? So putting a stop order over here, if this breaks, price is shooting up, because then the supply has been overridden by this demand. But if at this point in time it goes down, then the supply is stronger and this demand fails and the price is going down, right? Look at what happened. We had a tap in with this bearish candle with the wick. Price went down. At this point in time, I was sweating, of course. You can always be wrong at this point in time. The supply could take over and then break your structure and continue downwards with a stop loss. But again, trading is a game of probabilities, right? So you have to execute. You cannot wait for a perfect setup every single time. And look at this. We had a nice, easy, stress-free 3-hour trade. And if I were to show you another one, and I haven't done the analysis on this one, but let's look at it. This is a bonus one, guys, for you all. So this is outside my trading time session, right? I trade only 2 hours, London and New York, and there are ample opportunities. And this is non-trending market, right? So the ranges is what I get on Fridays. But anyways, if I were to look at this candle, it had a strong momentum candle. It broke structure to the left clearly, and you can see that price is trending very strongly up. Now, when it was trending strongly, it created this pullback and pushed higher, which means that it has created a demand zone. And price did come back into this, let's say right here. It had another demand zone here, so we're following the chain right there. This was a pullback, pull out, pullback, pull out, and then it's coming back into into these demand zones. So now, how would I enter this? I could have entered at a stop order at the top of this candle, did not happen. I could have entered at the top of this candle, price went down, did not happen. When did I enter? When I saw, or when will I enter? When I saw that this liquidity has been taken, inducement, for guys who understand that better. So that inducement has been taken, then there was a strong reaction with a major close bullish, and I could have easily placed a stop order or executed a market order with placing my stop loss right behind that 3.9, and look at that nice run. That's a 4.7 RR trade. In fact, even more if you went to the high. So I typically run 2 to 3 hours, but that would be my trades setup. Thanks, guys. Talk to you later. Bye-bye.